Well, hello and welcome to another video in the series where we're looking at the VRSI indicator in more detail. That's the volume relative strength indicator on NinjaTrader here. And I promised to look at some other markets. We've the introductory video and the subsequent video was on where we were looking at stocks, particularly from an intraday perspective. And here we've moved to futures. Now, I'm not going to go through the whole futures gamut because it would take too long, but I've chosen just an index future here. But this could be any future you care to name. It could be gold, silver, softs, commodities, whatever commodities. It's the oil, whatever the futures contract, you can apply the VRSI in the same way. And if you've watched the other two videos, then you'll know that this indicator is all about pressure. It's a word we use a great deal to describe it. It is used in combination with our volume price analysis methodology, which is why I have a split screen. I have the 5-minute, 10-minute, 15-minute on the top line, and I've got precisely the same timeframes below, along with volume. So I have volume below, which gives me a very clear view on what is going on from a volume price perspective, and then above, I have the indicator, which is giving me a view from a pressure perspective. In terms of the key elements of the VRSI, if you've not watched those two videos, I would urge you to go and watch them because they do explain all these principles. But the principles are very simple and they mirror, if you like, the same principles that we apply when we're using our volume price analysis methodology. And indeed, in the center there on screen, it really speaks for itself, where we have a market that is falling. We're on the ES here. We're on the September contract for the ES mini future, which is the futures contract for the S&P 500. And what we're seeing here is pressure rising. And by pressure rising, I mean the pressure bars, as we call them. These ones here are increasing in height. So we have a falling market and we have rising pressure. And in addition to that, it is a dark color. So it's telling us that pressure is good. We are in very bearish territory here. And when we look at the volume profile below, that is mirrored. We have rising volume and we have a falling market. And that is really VPA 101, which really confirms the strength of any trend. In a trend up, we want to see rising volume and a rising market. And in a trend lower, we want to see the same. We want to see rising volume, which is confirming the strength of that particular trend. And it is precisely the same with the VRSI indicator. So the principles of the VRSI indicator are really very simple. We have a fulcrum point here at 0, which denotes when we move from bullish rather to bearish, or bearish to bullish, whichever way the market is moving. So that's the first point, the crossover point. We then have these changes in color, where we go from a dark blue to a lighter blue to a lighter red or reddy orange or pink, if you like, through to our dark orange. So we have 4 color phases to consider. So we're looking at the pressure from that perspective as well. And finally, we look at pressure from perspective of the height of the bar. As we can see here, we've got rising height, so we've got increasing pressure, which is also denoted with the darker color as well. And we've moved a long way from the fulcrum point. And all of that is encapsulated in multiple timeframes because, as I explained in an earlier video, what you're looking for is trend development. The trend always starts in your fastest time frame and moves through to your slowest time frame if indeed it is a genuine reversal in trend or a strengthening of trend. That is what you will see, which is why multiple time frame analysis is absolutely crucial, not only with this indicator, but with every other indicator that we create at Quantum Trading. And in this case, it has to be incorporated with volume price analysis because that gives you our all-important alternative view, our underpinning methodology, which is VPA. And then what the VRSI indicator does, it really teases apart one layer of that and gives us this view of the pressure that volume is applying into the price action, if I can describe it in that way, which I think really does describe it very clearly. If we start with the 5-minute, this was from Friday's trading session. You can see we had, and here it really describes the indicator in pretty much every way. We have the fulcrum point here, so we have the crossover between bearish and bullish, or bullish to bearish. We have the different heights of the pressure bars. So we have tall pressure bars here. We have a sequence here where we've got nice, very high pressure bars. They are darker orange, so they're telling us this pressure is high, but it's also denoted by the fact that we have the pressure bar itself is very tall. So it's telling us in two different ways, if you like, very distinct ways, that we have strong pressure, strong momentum behind this move. And when we get the weaker colors here and the attenuation of volume of the pressure bars, that is telling us that that particular trend is pretty weak. It's not strong. It doesn't have a great deal of pressure behind it. This move here has got pressure behind it because we've got, for two reasons. Firstly, because we've got dark orangey red pressure bars. Secondly, because those bars are increasing in height. When we move into the bullish phase up here, whilst we have some injections of pressure here, it's not particularly strong. You can see how very quickly we rotate into lighter blue and it falls away. The height of the pressure bar is falling, and you can see it particularly here as we fall away and we start to rotate from one trend into another, and then we move below the zero line and we start to rotate into the bearish trend lower. And at the other end of the spectrum, where we start to come out of the other end, and then we move to the end of the day where it all just dies away very quietly. The other aspect that really denotes a strong trend is where you see the pressure bars are of similar heights. In other words, they're not declining very rapidly. We get changes in color. We certainly get punctuations of a little bit of a slowdown, but they don't decrease. They don't diminish in height much, which is really giving you confidence to hold that trend. And this is what it's all about. The VRSI is very similar in that idea as the trend monitor, if you're familiar with that indicator, where we've designed something to help to give you the confidence to stay in a trend once it's underway. Once you've jumped into a trend, maybe you jumped in once we got below this point here. It was that you saw support being breached. You thought, yeah, okay, we saw volume rising, maybe a nice move away, so we're going to jump on that trend, and in we go. And then we get down to this level and we start to see a little bit of reversal. We start to panic and we take our money off the table. That's an emotional response. It's understandable. We all suffer with it, but it's an emotional response that we have to manage and we have to combat somehow. And that's what this indicator does. It's like the trend monitor. It's helping to give you the confidence. Yes, we are starting to see a weakening in pressure, but that pressure weakening is not huge because the height of these particular pressure bars is remaining pretty high. It hasn't gone to this sort of level. It's staying up here. So this is good. This is strong. This is not telling us this is weakening just yet. So we hold. It gives us confidence to hold and we carry on. And we're grateful we do, because on we go right the way down to the bottom here. And maybe we close out because it's coming towards the end of the session anyway. And that's what it's all about. And even when you get an injection here of an upwards candle, even there, the downwards candle, the pressure candle to the downside, is not diminished hugely. It is diminished for sure, but then we get some more confidence building pressure here, if you like, with our reversal back to darker orange, or a dark orange phase, which is very bearish sentiment, which is great. So that will help to keep us in. That's on the 5 minute. This is on the 10 minute. There we go, and really encapsulates that, if you like, into the chart. Now, the interesting thing here, which I want to point out, is clearly when we're on futures, really they trade 24/7, almost 24/7. There are very short periods where everything is closed for consolidation and for margin calls and everything else. But generally speaking, these are 24/7 contracts. So what you see here is typically what we see when we're looking at them in terms of the cash markets opening. We get the surge of volume, but what is going on in here is Globex. Now, you might look at that and think, well, the pressure bars are very, very small, and indeed they are, purely because everything is compressed by what's gone on since the open here, since we start to get into the cash markets. At this point, +2 our time, off we go. volume surges, we see the cash market open alongside the electronic, and of course volume surges. It's massive, and that compresses everything that's gone before, which is not unreasonable. That does not mean, however, that these are not readable in the context of the price action. They are very much so. It's exactly the same as trading the futures. In fact, if I just drop that out of the way for a moment and we go down to, we're on the 10-minute here, aren't we? There we go. It's exactly the same principle as you see on volume. We get the huge volume surge here at 2:30 our time, UK time, as the market gets underway. But prior to that, this is Globex, and I've said on many, many, many other videos where I've done index futures, this is perfectly tradable. And in many ways, it's preferable to trade in Globex only because the price action is smoother. You can see it here and here. Everywhere, you don't get huge volatility. You don't get these big volatility spikes that we see at 1:30 and then again at 2:30 with the news, with the volume surges and all the rest of it. Throughout this period in Globex, where you're trading electronic only, the price action is much, much smoother, but the indicator will work in exactly the same way. This volume down here is not denigrated in any way. It's small, yes, but it's only small because the volume over here is huge. When this was trading, I can assure you, because I trade electronic futures more than I do in the cash markets, because the price action is more measured, it's more even paced, it's more straightforward, it's easier. I haven't got the volume to deal with. I haven't got the volatility to deal with, rather, beg your pardon. I haven't got the volatility to deal with that I have to deal with at 2:30 in the first half an hour, where the indices are all over the place because of that big, massive surge in contracts and volume and all the rest of it. So do not let anyone tell you that you cannot trade in Globex alone on these markets. You can. But I wanted to make the point that just as with volume, so the VRSI has the same. These, I can assure you, this is perfectly tradable. They look very small now, but only because of this compression caused by the volume surge in the cash markets coming online. As for the rest of it, very much the same as we saw before. We see this trend, but it's not particularly strong. And then we see the attenuation of the volume, the pressure bars falling away down to the fulcrum as we move from this mildly bullish trend, and now we're coming down into the start of a bearish trend, perhaps. But then we start to see the pressure bars building, and we've got very similar alignment to our VPA methodology, where we've got falling price, rising volume, rising pressure bars. Great to see. And then gradually, as we come to the end, these do not fall away very fast. This is the point I was making. It's really nice. They're still tall. We get further pressure here. And then gradually, as we come to the end of the session, then what we expect to see, we move into a quiet period. And just finally up on the 15-minute, exactly the same sort of principles there. You've got this very, very strong confirmation of the trend. Really, you can't miss it. It's so clear cut. We've got rising pressure, hugely rising pressure, and it's pressure that's maintained as a result of these high bars here. These pressure bars are really maintaining that level, so it's very, very bearish at that point. And on the other hand, the trend here is not particularly strong. It's fine. It's a tradable trend for sure, but it's not a particularly strong one because the bars are not that tall. And yes, they are a little compressed by these. Of course, it works in the same way as I showed you in one or two of the other videos. So I'm not going to go through a whole raft of futures here, but as I say, if you're trading index futures, if you're trading commodities, if you're trading softs, if you're trading metals, if you're trading energy, you're trading oil, if you're trading bonds, anything you can trade in futures market, even cryptocurrency futures, they will all work in exactly the same way with this particular indicator. It's a fantastic indicator. Use it in combination with volume price analysis methodology. And I lay the charts out like this because I think it works the best way. It's nice and clean. I've got my volume below and I've got my VRSI above, and it just works great. So I hope you've enjoyed this particular video. Lots more to come. See you soon, and bye for now.